please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Top 5 headlines from the day's rather chaotic and riotous trading action. Hello and welcome to Markets Today Talkback, the show where we will tell you about 8 hours of trading action in just 5 headlines. I'm Lata Venkatesh. With me, my colleague Prashant Nair. Hi, Prashant.
Hi, Lata. What a day. Absolute roller coaster.
And unexpectedly so.
Unexpectedly so. And especially the second half, chaotic, as you said. Over the next 30 minutes or so, we will discuss the top 5 market headlines. Our experts will answer your stock questions. Joining us now to answer all your stock questions are Mayuresh Joshi of Angel Broking and technical expert Mitesh Thakkar. Gentlemen, thanks very much, both of you, for being with us here. But before we come to you, let's quickly wrap up hour by hour what happened as far as today's trading session is concerned. Lata.
I was not prepared for the kind of carnage we saw in the mid-cap space. It looked like it would be another day of records because we had Wall Street tailwind behind us. We had the private bank news that there is a potential FDI cap limit increase, and we had fairly good results of Hindustan Unilever and MindTree behind us. So it did look like there are several sectors, banks, mid-cap, banks, IT, FMCG, and a global tailwind all set to cheer us. But then there was this sudden sell-off. Yes, the banks continued to perform. So Nifty Bank is quite a performer today. It's the best performing index, actually, with 1% in terms of gains, largely buoyed by HDFC Bank. But the mid-cap sell-off, it looked like everybody waited for all the good news to come in and then dump all the mid-caps that they did not want. So realty, leveraged stocks, and some metals as well were the ones that caught the investors in the selling mode. But in more detail, what did you notice stock-wise?
I mean, so pain points first up. As you said, real estate and metals really took it in the chin. PSU banks were the other pain point. So real estate, metals and PSU banks, top of the sort of mind in terms of pressure points. Spots of strength, FMCG, private banks and the IT index. I'll come to constituents in a bit. Meaningful gainers, ITC, I mean, they're easier to count. There are very few. So ITC, HDFC Bank stood out. And let's cut to the losers now. Long list here. So Bharti Infratel, large caps, big cut, UltraTech. I mean, actually, cement as a space now for the last 2 days has been quite weak. Gas Authority of India was another big loser. Now, some group of stocks, right? Metals, Tata Steel, Hindalco, JSW Steel, I can go on, JSPL, they all sort of were under severe pressure. Adani Group stocks, ports, power, enterprises, big cuts there. ADAG group of stocks, Reliance Infrastructure, RCom, Reliance Capital. I mean, I guess, as we pointed out in one of the headlines, over-leverage, huge amount of build-up. I mean, that contributed in some significant way to the fall. Other big losers, there was DLF, which cracked. I think it's back at about 250. Just Dial was down, and Nagarjuna Construction Company was lower by about 5-6% as well. Broader market gains, just a few names here. MindTree, we pointed that out. Godrej Consumers was up by about 3% or so, and Indiabulls Housing ended the day a bit higher as well.
Okay. Well, let me take this situation straight away to Mitesh. Mitesh, in the morning, all of you, our tech gurus, warned us that it's not going to be a rah-rah day, and it didn't turn out to be. But at the end of the day now, is the Nifty ripe for a long trade tomorrow? And what about the mid-caps? Are there pockets where there are huge shorting opportunities that are still available?
So, good evening, Lata. I think my only worry is that the Nifty has been extremely overbought. You know, the last proper decline came on the day of Gujarat election results, that was a month back, and we've had a rally since then. So I think the intraday charts are extremely overbought. Typically, that should call for some profit booking or a sideways consolidation. So I don't think going long on the index is a good choice unless until you get a 100-150 point kind of dip. So I would wait for that dip to happen, otherwise avoid the index trading.
Okay, but mid-caps are still open to more selling, you think? Any specific quarters?
I would believe so. I think the Nifty mid-cap index has given a breakdown. So my sense is that the mid-cap index just had, again, an index which was extremely overbought. We'll go through about 3 to 4 more percentage point of correction. And if that was to happen, individual stocks can possibly correct by 5 to 7%.
Okay, well, actually, Prashant, you and Mitesh, that's 2 of you with a grey shirt, a red tie and a bad throat. Go ahead.
Okay, all right. Let's get to the next headline, the second headline of the day. The Nifty mid-cap index tumbled 2% in trade today to record the biggest fall in 4 months. The fall was led by over-leveraged stocks, especially in the metal and real estate companies. We highlighted some of the names which came through earlier.
Okay, with that, we have got some mid-cap stocks which people own, and they want your help on that, Mayuresh and Mitesh. This is Pintu, who has tweeted to us that, well, I think he bought 1,000 shares of Welspun India a week back. He wants a view for the long term, actually. Okay, now, Mayuresh, you want to take a jab at this Welspun India for the long term?
No, I think, Lata, there might be better stocks that I might probably look at this point of time. Since he's already holding on to it, I think he can probably look at alternative avenues. So what we're probably liking within the mid-cap universe at this point of time is something like an SHK liquor on declines. I think fabulous set of numbers. And what the management is probably guided at this point of time in terms of both value and volume growth should be quite substantial in terms of an earnings profile. The second element can also become a few of the mid-cap logistic companies on significant declines. So our own take is something like a Navkar corporations look extremely attractive on a bottom-up valuation basis, where the EBITDA per ton, specifically in its new Vapi ICD plant, should start improving significantly as the real ICD starts becoming operational. And generally, I think the numbers should show uptake as utilization levels should pick up. So my own sense is that at higher levels, probably take some money off the counter and probably look at these two counters in a staggered way on declines.
Okay.
All right, we have another question. Twitter user Chandrasekhar has bought 200 shares of NoSil at 130 rupees a share. Price is 200 plus now. He wants to know about the outlook for the next 6 months. NoSil over the next 6 months. Mitesh, what would you tell Chandrasekhar?
Yeah, well, one, I think trail the stop loss to about 180. That's where the medium-term averages are placed. So just below 180 should be your stop loss. I think as long as that is not being broken, it might consolidate for the next few weeks. But since he has a 6-month kind of horizon, which is about 24-25 weeks, my sense is that after this 180, 220 kind of consolidation, the stock should head towards 250, 260 on the upside, which could be a good target.
Okay. Well, thanks a lot for that, Mitesh. Since it's a shorter-term call, we'll leave it at that and get to the third headline from the markets. Nifty Bank gained nearly 1% today as the government mulls 100% FDI in private banks and 49% in public sector banks. HDFC and HDFC Bank saw a 2% uptick each. Now, that's easy to explain. HDFC Bank is looking for money, and for the longest time, its ADRs are trading at a huge premium. That's because HDFC's stake itself is considered foreign. HDFC is owned 75% by foreigners, so that company is considered foreign-owned. Their 21% stake in HDFC Bank is foreign, and the remaining is easily bought up by FII and FDI people, and therefore people are hungry for HDFC Bank shares, foreigners that is, and the expectation is that if this rule were to come, then the first beneficiary would be HDFC Bank, and if HDFC Bank's share becomes pricier, then HDFC's holding obviously in a sum of the parts calculation becomes pricier. But the other stocks, Axis, IndusInd, Yes Bank, Kotak Bank, all these are only one board resolution away. If they are able to raise the permission for foreigners, then more foreign investors can come in. But then, of course, this also requires what the government is mulling to become a done deal. This is only a proposal at the moment, which may go to the PMO. Public sector banks, unfortunately, did not, but expectedly did not rise because of this. As it is, 20% is allowed for FIIs, for foreign investors in PSU banks. Most of them sit at 10 or less. I think State Bank alone is 12%. Otherwise, it's not as if there is a rush of foreign interest in PSU banks, and therefore, you may raise the cap from 20 to 49, but only 10 may be interested. That explains why PSU banks didn't move.
We have some questions. We have the first one actually on IndusInd Bank. Twitter user Swapnil wants to buy IndusInd Bank and RBL bank stocks for a period of 1 to 2 years. He would like advice on the same, whether this is advisable to do or not. That's IndusInd and RBL. Mayuresh, I mean, both of them, either one of them, what's your sense?
Both of them over the longer haul probably look good. And again, I think the kind of numbers that they've been posting specifically in terms of their advances growth, I think it's quite exemplary. I think for IndusInd Bank specifically out of the base that they're working out of, and with the numbers that they're posting also on the asset quality front, I think they're right there in terms of the top quartile in terms of performance, and that's getting duly reflected in the reported ROAs and ROEs. For RBL Bank, I think there might be some hitch in terms of the reported numbers. But again, I think out of the low base that they're working, the advances growth can be quite stupendous. Now, when you're talking about NIMs, when you're talking about cost to income ratios, I think the parameters probably stick out for both these banks. And though valuations probably look on the higher side, I think the growth trajectory might very well continue with minimalistic asset quality pain on both their balance sheets. So yes, declines in a staggered way. If he's looking at both these stocks within the private banking space, he can definitely go for it with a long-term horizon of a year and a half.
Okay, thank you very much for that, Mayuresh. We are going to come back with more questions after the break. But while we get into the break, RBI former Governor Raghuram Rajan has a reputation for being able to smell out global financial problems. The markets are now in a very positive mode and they are not worrying that central banks are going to roll back their balance sheet. Is this a problem? Will this be a problem for markets? Listen to what this former central banker says. We are back.
I think there's good news, which is what the stock market is reacting to. The fact that all the economies are now growing together, which hasn't been there for a long time. And of course, in the US, the tax cut, the corporate tax cut has been useful in terms of corporate profitability and so on. So some of that is a reaction to the good news on that front. At some point, the markets also have to recognize the fact that interest rates will slowly start climbing up. Now, the hope is it's going to be gradual, very slowly, that even as the Federal Reserve sort of unwinds its portfolio, the Bank of Japan will continue buying and the ECB will take some time. Now, all this is going to happen. The question is at what pace. If it can happen at a measured pace, the hope is that stock prices and other asset prices, whatever air there is, will leak out very slowly rather than abruptly.
And we jump straight into the fourth headline of the day. The day's big earnings. Private sector lender Yes Bank reported a largely in-line set of earnings for the third quarter. Asset quality improved, but net interest income disappointed a little bit. Lata.
Well, you said it in a nutshell. Profit came largely in line, but one is used to growth at Yes Bank, and that didn't show up as much as expected in the NII, about 100 crores short of what the street was expecting. It's the margins that really came out for disappointment, if you please. 3.7 is what they were doing, and now they're doing 3.5. The bank blamed it on the perpetual bond high cost capital that they raised, but then why did you raise it? Why couldn't you raise cheaper capital would be what the investors would ask. But otherwise on slippages, it wasn't a worry, 495. Actually, one didn't go into this Yes Bank results with too much of fears because their RBI audit is over and the divergence has already been revealed. So no further ambushes or booby traps were expected. And the management exuded confidence that even the provisioning will catch up. Let's listen to Rana Kapoor on that issue.
Overall, we have, NPAs which are not necessarily very sticky. So through a combination of improving provisioning and a reduction of NPAs that we contemplate in the next couple of quarters, certainly in the March quarter, and then followed well into June quarter, we do expect to get to 60% provisioning, in my assessment, no later than June of 2018.
All right, that was Yes Bank. Now to UltraTech Cements. In earnings, UltraTech Cements and Yes Bank posted a mixed set for the third quarter. UltraTech sales volumes rose, but margins fell on a yearly basis. The company posted a mixed set of numbers for the third quarter. On one hand, the company saw a rise in sales volume, strong one at that. Margins, though, contracted on a yearly basis. Nigel D'Souza has been doing all the number crunching. He joins in with more details. Nigel.
Well, on the whole, UltraTech Cement's numbers were quite disappointing. But let's start with the brightest spot at least. On the top line, there was a beat. Now, we were working with sales volumes growth of around 20 to around 22%. Now, sales volumes jumped up by close to around 37%. But unfortunately, the top line growth is only 35%, telling you that the realizations did decline on a year-on-year basis, and that was a bit disappointing. Not just that, why were the sales volumes higher? Because higher contribution came in from JP Associates acquired plants. Remember, those plants were acquired and now they are consolidating in their books. Remember, in fact, the street was working with JP Associates plants that were acquired. They should function at a capacity utilization levels of around 40 to around 45%. They came in at around 60%. So higher capacity utilization levels from JP Associates, that's what helped the top line, but that's what hurt the profitability as well. And that's why the margins came in at around 16 to around 17%. It did see compression on a year-on-year basis, primarily because of consolidation of JP Associates. Just to give you a couple of numbers, JP Associates, the acquired plants, they used to give an EBITDA per ton of roughly around 400 to around 500 rupees. UltraTech Cement always gave you a EBITDA per ton of around 1,000 rupees. So now with this consolidation, it automatically dilutes the EBITDA per ton. And also remember that in the past quarter, pet coke prices did surge up. And with that, we also had a pet coke ban. So that's what led to the big surge that we're seeing in the power and fuel costs. The profit number as well did see a bit of a decline because finance costs did spike up on the back of this inclusion of JP Associates plants in the consolidated entity. And also the effective tax rate was higher on a year-on-year basis. These numbers, they go down as a disappointment, primarily because of the operating performance.
Okay, we have Makarand who has sent us a question on UltraTech Cement. He has SMS'd that he wants to invest 60,000 rupees in this company for a long-term. Advice on when he should enter. Well, Mayuresh, can he enter right away?
No, Lata, I think with all the pointers that Nigel pointed out, again, I think the EBITDA per ton obviously is going to be lower on a blended basis as utilization levels of JP plants start moving in. Add to that, I think the sand mining issues plus the pet coke issues, the input cost inflation will probably eat into margins. And again, valuations probably on the higher side in terms of a band matrix. So again, I think declines within the large cap names and UltraTech does stand out is the way I look at it. But you should probably diversify his cement portfolios out of the mid cap names as well. JK Cement, which has a mix of white cement where realizations are very, very strong, can also be looked at decline. So I think a couple of these stocks on declines in a staggered way as valuations will become a little bit more cheaper if the market's correct and they too correct becomes a viable option for the investor.
Okay, Anand Upadhyay has a question on Yes Bank. He's got 50 shares bought at 315 rupees. That's 315. And he's been holding the stock for the last 2 months. He wants to basically know what to do, hold or sell. Mitesh, Yes Bank.
So I think the stock has been bought at a good price. If it's a medium-term kind of a holding, I think around 365, 370, which is where the earlier base building was done. I think that should be the exit point. Otherwise, I think it's a hold. He's bought it very close to the long-term support zones when it was at 300. We said 280 to 300 is the long-term buying zone. So I think his buying has been good. But in the short term, the targets are around 365, 370. Else, I think just hold on.
Okay, thanks for that, Mitesh. Well, the last headline, it's yesterday's news, but today's performer, MindTree, topped the mid-cap index after reporting a strong third quarter number, especially margins. The company's margins improved across segments. Revenue growth was in line with expectation, and all mid-cap IT stocks rallied on the back of MindTree numbers, or rather most. The company's management expects margins in the fourth quarter to remain stable.
It's a multi-year high for MindTree in terms of growth rate for Q3. Strong growth momentum led us to a 3.9% revenue growth in this quarter. Margins improved due to many factors. The revenue momentum was one very big contributor. In this quarter, some of our large projects that we won over the previous 2 or 3 quarters completed the transition phase and moved into steady state. So that led to a big improvement in revenues and also in realized rates, and that contributed to margin improvement as well. We also had a lot of cost reduction measures as well, which led to cost optimization at an SG&A level, both of which contributed to margin improvements in this quarter.
Okay, we got a question on MindTree. Twitter user Om Prakash has 488 shares of MindTree, which he bought 2 weeks back for 681 rupees. Price today is 681. He would like a long-term view on this. Mayuresh.
Absolutely, you should hold on, Prashant. And the numbers were exemplary because the sequential dollar revenue growth of almost 4% was very, very good and above market estimates. You've also seen then the pricing has improved by 5.8%. So I think a lot of clients from the transitionary stage actually moved to fixed contract kind of a stage. Again, I think the top 10 clients are contributing quite significantly, and you're seeing an all-round performance sector-wise, whether it's banking, retail, and even the digital revenues, which contribute 44%. The transformational deal wins will contribute significantly. In terms of an earnings outlook, probably one of the more expensive stocks within the mid-cap IT space, but the margins that they posted because of operational efficiencies, lowering of SGA costs, and as the management is hinting that if they're able to maintain these, I think no reason why the stock shouldn't be probably trading at premium valuation. So yes, I think it's a clear hold from my side.
Okay.